very warm good evening to you all.
Evening.
Mr. Keyur Shah sir. Before sharing my views, let me introduce myself to you. My name is Varun Tyagi and I am working as an independent financial planner in Delhi, having an experience of 7+ years of working in the financial domain and managing all aspects of financial functions from managing to planning to advising. I am a CFP practitioner and had completed my CFP certification in 2015. Prior to the certification, I had completed a postgraduate diploma in wealth management in 2008. I am also a master's in economics and is also an NSM level 2 certified investment advisor. This is all I have possessed till now. But as you say that a person should always be ready to learn. So I am pursuing Chartered Wealth Management program. So as of now, while working independently as a financial planner and advisor. Eventually, I started with the asset development of my clients with acquisition, rebalancing and restructuring of their loan portfolio. Then I began developing skills related to financial planning and portfolio management and advisory services. In that role, I succeeded in multiplying the wealth of my clients by carefully analyzing the market. Later on, with the development of, with the completion of my CFP certification and subsequent exposure to financial planning, helped me with an informed view of what would be the beneficial for my clients. I have mostly worked with corporations and have handled individual finances too. Journey from CFP aspirant to CFP practitioner. After completing my PhD in wealth management, I worked for a few years, but sooner or later felt that something was missing. After thorough analysis, I came to a conclusion that a professional qualification is a must in the financial domain, and I felt that this is the need of the hour. And I felt that CFP certification will give a boost to my career. I registered myself as for the program, and after completing 3 modules, felt that professional guidance is needed. So at that point of time, someone suggested me the name of Mr. Keyur Shah, and I checked on the web, and that's how I opted for the video learning program. And now today I am proud that I have completed my CFP certification, and I am ready to cater the financial needs of my clients more specifically and deliberately with the knowledge and skill set that I have gained throughout this certification. Benefits of CFP certification in your personal and professional life. The benefits of CFP certification that I have analyzed throughout these years is that there is a personal satisfaction of achieving the financial planning profession's highest standard and meeting the global benchmark. Number 2 is the satisfied clients who appreciate the comprehensive approach to financial planning and extended long-term relationship with the referrals. The CFP certification has helped me to give a boost to my career and a professional life to a great extent. The client definitely goes by your credentials and understands that the person he is dealing with is definitely a knowledgeable person, full of ethics and integrity. Because in my view, people like to deal with someone who is honest and full of integrity. It allows them to build a level of trust that a person with that person. And then as a planner, I think trust is crucial, because clients are trusting you to provide them with their accurate information to make a decision. Benefits of training with Keyur Shah. After completing my CFP certification, when I look back and analyzed what made me successfully complete my certification, I realized that it was Mr. Keyur Shah's guidance and the innovative idea of his learning. Now I can say that the video learning kit is a perfect way to study. The e-learning, e-study material that Mr. Keyur Shah has provided is in abundance and is up to date. The 5-step process is definitely a game changer. The principles shared are amazingly practical and simple. After completing the last video, I wish I would have joined the live classes too. 100% guarantee of success in exam 5. Yes, this statement is very true when it comes to Mr. Keyur Shah's video learning program. It's not just a training program, but the wholesome knowledge imparting process which is very rare to find. Be it queries related to the exam or the queries related to the profession. Keyur Shah is always available round the clock and always more than happy to help the participants. I would like to take this opportunity to thank Sir for making this possible for me. You can make out that this man is just not for money, but he wants his students to pass with the CFP with good grades and leave no stone unturned for the students. Once again, I thank you, sir. Now, how to set up a successful fee-based service? Recently, it has become increasingly clear that a fee-based approach is far better, more suited to today's investment climate. Since the financial crisis, many areas of investing has become increasingly uncertain. Markets that seem stable one week may be volatile next week. In this reality, investors don't need a salesperson, but a financial consultant. Someone who can help them with the answers to the where, when and how of investing. Someone who can help them with security in an increasing uncertain world. And most importantly, someone who can help them achieve their financial goals. It is clear that the commission-based approach doesn't provide the structure to support clients in this more holistic way. Now, the potentials of a fee-based structure are very clear, but how do you begin the process of converting your practice? I have divided this, in my views, into a few steps. Number one is evaluation of the business, evaluate your business. The mindset transition involves reframing on how you see yourself as an advisor. This is the perfect time to ask yourself, what type of clients do you most enjoy working with? Which aspects of your business do you most enjoy? How many clients do you want to serve and how much staff will you need to support them? Going by step 2 is mapping out your goals. After you have decided which platform makes the most sense to you, given how you want to spend your time, how will you think through the business side of the transition, then begin by considering which clients are you willing to go for, how much AUM would you like to achieve, what level of account minimum makes sense for your business. Then we go to step 3, that is segmentation of your clients. When it's time to start the conversation with clients, begin by putting all your accounts worth rupees, whatever you wish to take. Let's suppose we take 1 lakh or more on an Excel sheet. Include the value of each account, whether funds are taxable or non-taxable, and the products in which clients is ready to invest. Use this Excel sheet, segment your clients into following categories according to the level of the involvement they typically require in the investment process. I have segmented the clients into 3. First is the outsourcer. He has faith in your decisions. Whatever you advise them, they believe. They will agree to any recommendations that you provide. Second is the semi-outsourcer. He believes in your decisions, but does not invest on your recommendations. He will typically require more and more information. He'll do the research on his own and then he'll go for investment. Third is the analytical. It is more critical and will need to be convinced much more. He doesn't go by your recommendations and he wants to go by the research and observations that validate your recommendations. Then we go to step 4, that is plan your communication process. Be prepared to speak confidently about your conviction that switching to a fee-based structure will help you serve your clients better. The following are some ways which you might want to frame the change. Number A is, with a fee-based structure, my success is linked to yours. You can tell the client, this dynamic approach affirms a key aspect to our relationship and has always been in place. I'm on your side and your financial success is my top priority. Second, you can tell the client that today's financial markets are volatile. calling for greater diligence and often sometimes more frequent changes to portfolio strategy. A fee-based structure gives me the flexibility to respond to the critical market changes without added cost to you from trading activity. Third is, I am moving your clients up to a better way of doing things. While commissions are focused on specific financial products, a fee-based approach stresses a broader, more important goal of ensuring that your whole financial picture is in good shape. Number 4. Ask how often do you think a change should be made to your portfolio? The overwhelming answer will be once a year. Not only we can rebalance a year, but we can do 4 times a year to make sure your investments stay in line with your goals. Tell them that you will be providing a full understanding of their goals for them and their family. A continuous balancing of their wealth management towards life goals. Identification of specific investment objectives and their risk tolerance with each one. A highly professionalized and professional experience. Step 5. Execute the transition. Now that you have thorough analysis of how you will run your fee-based business, it's time to develop an implementation timeline that will move you from your initial conversations with your outsourcer clients all the way through your analytical ones. Once a client has completed the paperwork, you will need to determine how to redeploy their assets into a fee-based platform. The size of their holdings will likely determine whether you will place them in the mutual funds or different financial instruments. My choice of subject of presentation is, can you invest on your own? There are many reasons why individuals should invest in financial products without an intermediary. The spread of online facilities and availability of research data have made do it yourself investing easier and more rewarding in the recent years. The best example of an online term insurance plan that they are 30 to 40% cheaper than regular policies. A 30-year-old man will pay 18,000 a year for a cover of let's say 1 crore if he buys offline. But at the same time, the life insurance cover can be bought online for rupees 12,000 a year. Mutual funds too can be bought directly. Direct plans have lower charges and then the regular plans because they don't have to pay direct distribution commission. Lower charges mean higher returns for the clients. I'm just focusing on the question asked in the earlier presentation. If the regular plan of the fund generates 10% returns, the direct plan of the same fund will lead to 10.5 or let's say 10.75% return. This is why since the launch in January 2013, direct plans have generated almost 37% of the total industry AUM of 13 crores. Understandably, distributors are met with SEBI for introducing direct plans. They contend that the lower cost does not require the direct plans are better or that the investor do not need guidance. Now, the big question is, should you invest on your own or pay somebody for guidance? The answer will depend on your knowledge on the money matters and your financial situation. As I discussed earlier, do it yourself investing can be very rewarding, but it requires a lot of time, effort and discipline. It not only requires a knowledge of financial products and rules, but also an ability to invest prudently and handle the debts. You also need to access your requirements and future goals. A certified financial planner here comes in the picture. A certified financial planner will access your risk profile, he'll access your cash flows, he'll calculate your insurance needs, your future goals and plan your vacations. He'll prepare a financial roadmap for you. Now, 10 things things that you can expect from a financial planner. What you should do is you should do a thorough risk profiling to know your ability and willingness to take risk and accordingly establish an asset allocation strategy. Number 2 is you can draw up a list of goals and timelines and check out an investment plan to achieve them. Number 3, recommend investments with your interest and explain risk and features of the recommended products in detail. The 4th thing that we can expect from a financial planner is that you can diversify your investments across classes and not make frequent or tactical changes in the plan. Number 5 is ensure that you have adequate life, health and asset insurance. The next thing that you can expect from your financial planner is that he gives you enough time to make decisions. Now he updates you if there are any changes in the rules, may it be the taxation or the other rules, that could impact your existing or future investments. He can manage your tax filing and other related tax issues. He recommends a strategy to manage your debts and other liabilities. Recommended estate planning to distribute your assets among your heirs is the last thing that you can expect from a financial planner. Now, where do it yourself investor can go wrong? The problem with the DIY investing, that is the you do it yourself investing, is that the most of the people don't even know where they are wrong. Let me put an example here. A client of mine having 18 years of business experience fell for a simple math trick when he bought a term plan of rupees 50 lakhs with a return of premium option. He paid 33,000 every year and get back roughly around 10 lakhs after the policy ends in 30 years. That's the best part of the policy. It will return the entire sum and will pay the 30 years and will pay over the 30 years, he told me. But when you see a regular plan of rupees 50 lakhs would have cost him around 17,000 a year. Now if he had invested remaining rupees 60,000, let's suppose any instrument, maybe PPF, to earn a modest of 8%, let's say, he would have accumulated 18 lakhs in 30 years. Now, the Sensex tanked almost 1,000 points. Let me take you to another example. The Sensex tanked at almost 1,000 points after the Brexit vote and closed a day with a 604 point loss. That is a 604 point loss. While the individuals may panic in that situations, here comes the role of a financial planner. He can have a calming influence on the investor. Discipline is another hurdle that the DIY investor can encounter. Studies have shown that the annual rebalancing of the portfolio can yield better returns than your investment strategy. Majority of taxpayers opt for tax filing returns. However, taxpayers who file free may be paying a heavier price for the service. About 68% of the taxpayers pay more tax than their peers. These individuals can save thousands by taking advantage of various exemptions and deductions available to them. The financial planner can guide him through this. For a small fee, a planner can guide him through the process and reduce the tax amount they pay significantly. From the start, I have always catered my clients in the best possible way and tried my level best to provide them with the best possible instruments that are suited. As I started my career with the construction of my client's loan portfolio, I have managed to continue the same as of now also. We all know that the IFAs provide for the investment need of the clients, what about the generation of funds and the procurement of funds? Yes, I help my clients in the loan procurement too. I am also the channel partner for different banks and NBFCs doing business in the market right now. I act as a mediator between the banks and the customers for the facilitation of them. Today generally very few independent financial advisors are practicing this service, providing this service to their clients. The clients often ask about their knowledge and the right way for generation of funds, but due to the unawareness of the criteria and the policies, one does not deal with it and leaves the opportunity of servicing their clients here too. But my friends, if we try to build a platform which is one-stop shop for the clients, then we definitely can retain our clients. That's all for now. Thank you so much.
Quick question, any one or two? First. So now next speaker is Mr. Hemant. Hemant, please come.